You are listening to ChartingWealth.com's Training and Trends for Tuesday, the 4th of August, 2015. What are we looking at? We're looking at gold. This is our training for today. We're looking at what happened as the market ended the day on our two-day candle. We have seen gold in a powerful down move since it crossed over on our MACD going down back on the 23rd of June, 2015. Crossed over on the MACD, that's the moving average convergence divergence. Soon thereafter, we saw a crossover going down around the 29th on our derivative oscillator, and the price of gold has continued to slide. Right about the time it turned over, it had been at a high of 114.96. And again, whenever you follow gold on GLD, it's a tenth of what the price gold is trading for in the open market. So you just move that decimal over a couple of points and you can see what it's trading at, over 1 point actually, what it's trading at in the open market. So this is a tenth of what it's actually going for. And we saw it cross over on the 23rd of June and continue to plummet down, really plummeted down hard over our candles showing the 21st of July, the 23rd of July, and then it sort of bottomed out about there and hasn't gone a whole lot lower. The low that gold hit was somewhere around 103.43. And what has gold done since then? Well, it broke the two-day trend line that we had drawn. We had, it's actually a nice two-day trend line reflecting three candles, so over 6 days, ending on the 27th. That's 27th of July, and then gold started slipping sideways. So if we go and look back at what gold's up to now, what has gold done since it started slipping sideways? Well, it started slipping around the 23rd, and it continued to move on, and it stayed in a range of a low somewhere at about 104 up to about 105, 106. That's about where it is, somewhere in there. Where did gold end up ending the day on Monday? It ended around 104.10. Now, what do we learn from what gold's doing? Well, we know it's in a strong down move on the two-day chart. We can see that. We see where it sort of bottomed out on the 27th and then has not really gone below that, has slipped sideways. So what's gold doing? It could be setting up for an up move, but it could get ready for another down move. It crossed over on our 4-hour chart going up on the 27th, and when I say crossed over, I mean it crossed over on the MACD, the moving average convergence divergence. At the same time, it crossed over also on the derivative oscillator for the 4-hour chart. And so it has moved up and over and has started losing steam again. Now gold has tightened up in its move substantially. The Bollinger Band that you can see here represents volatility, and it has lost lots of volatility, gone from a huge range down to a very narrow range. Now we need to really pay attention to exactly what's going on there so we can get a feel for where it's going to go. If gold crosses over going back down again on the 4-hour chart, it will actually parallel the down movement on the two-day chart. So what should we do? We should probably look for gold continuing to make a down move, particularly if it pushes through where it sort of stopped, which is about where it is right now. If we see gold load up on the 4-hour chart and move over with some strong down moves and push the Bollinger Bands further open and drop, that means that gold is going to push through where it sort of stabilized at 104 or so and may see further substantial declines. Now, that is a long move for gold down. When we range out in our chart, we don't see gold having been that low for a long, long, long time. So if it moves on through and busts through that floor and keeps going down, then of course you want to either stay out of gold if you're looking to figure out when gold's going to turn around and move up, then of course that would not be a signal for that. But if you're trading an inverse of gold, an inverse fund, you might want to make money on that. So pay attention. If we see the 4-hour MACD roll over and go down and gold push through its floor around 104, get ready to watch it go down even further. That's our training tip for the day based on what we see in the charts. Very quickly, let's talk about where the rest of our charts are. When we talk about, we'll brighten it up a little bit, we talk about IYY, it is up on both the, just barely up on the 2-day MACD, and it is also up on its 4-hour chart. SPY is barely up. And again, we've got a real doji here, a doji, D-O-J-I. Look that up if you don't know what that is as far as candlesticks goes. It is a very much indecisive candle. Whenever you see a doji, which is like a big cross, it means that the bulls had about as much power as the bears. However, you can tell that the bears had dragged the market down substantially. The bulls pushed it up more than they could drag it down. So looks like the bulls might be a little bit more in charge than the bears are at this point. But again, lots of indecision there in the SPY. And the Qs, what is the Qs up to? Well, the Qs is still in a confirmed up move. Looks like you're having more of a convergence come together on the MACD, but still in a confirmed up move. And it's still in an up move on the short chart. Now, if you're interested in getting our daily review and forecast, we'd be happy to consider sharing that with you. However, in order to qualify, we've got to hear from you. And the way you do that is you email us, cw@chartingwealth.com. That's CW like Charting Wealth, but just the C and the W at chartingwealth.com. Tell us about yourself, why you would benefit from this, what kind of training, if any, you've had, and why we should consider sharing this information with you. And we'll tell you, if you qualify, how we would actually be willing to do that. Again, cw@chartingwealth.com. We appreciate you joining us. As always, wish you the best in trading and investing in the market. God bless. Thanks for joining us for our training and trends. We'll continue to move forward. We hope you do too.